Welcome to the Trading Market Technicals Morning Call video for Monday, May the 20th. Hope everybody enjoyed their weekend. Back to the markets. Markets up yet again. Now I believe it's 17 out of 20 days or 18 out of 21 days. Pretty amazing rally. This market is on fire and refuses to let down. And my suggestion is do not fight it. If you're a little bit uncertain about the markets and where it's going and you're afraid about taking any risk, which I personally am not taking any risk overnight, I would just take a step back and just kind of reevaluate it and just let the setups and trades come to you. Real quick on the gains, Dow up 1.5% for the week, S&P up 2, Nasdaq up 1.8%, Russell 2.1%. Then of course you see all the sectors here all in green, and then we had our commodities that really got hit, really took it on the chin. Crude oil, a lot of precious metals. Again, copper continues to diverge away from the markets. Something interesting, we'll see what develops this week. Palladium down 2.6%. Then, of course, heating oil and gas and all of the oil area all up on the week. So we had a real good week this week, this past week, and the markets, like I mentioned before, continue to grind higher. Money continues to flow into the U.S. markets as Japan and all central banks devalue their currency, and where they come here. They put it here to use, and the dollar had a huge week last week, pushing up higher again. And again, I mentioned before that that if somebody is coming from overseas, Japan, Europe, they have to convert their dollars into U.S. dollars, and the dollar continues to rally. And that does put pressure on the commodity sector. Usually is inverted as well in equities. This has not been the case. So, and that's because of this money coming in, this huge amounts of money coming into U.S. equities. Now, I do think it's going to hurt later on. Right now, again, we're really short term here. We like to look at the big picture. I do think that this cannot continue, and if we don't get some sort of a meaningful pullback, we're going to have a 1 or 2 day sell-off, which is going to be very scary for a lot of the retail crowd. And can we crash? I'm not saying that we will. I'm saying that that the correction could be deeper and faster and furious than a regular sidestep up move, which usually that's what we like to look for in a bull market. But we are literally vertical on all of our indices, and that's what I'm going to show you. So really, caution is extremely warranted here. We need to really be nimble, and I would not be taking any trades overnight. That's just me personally. I think the markets in the long term look great. However, we haven't had a pullback in months. We've literally been up since January 2nd, and we have been continually to grind higher relentlessly. And what happens is when everybody's looking for that pullback, like I mentioned many times, it's not going to happen. So until all of the shorts capitulate and until all of the longs continue to buy up at these areas, you have a lot of longs up in these all-time highs. And when the market does turn, the first longs are going to be gone are the ones that have been buying up here. So really just keep that in mind. All right, I want to go through some indicators. Really, it's useless, but I just want to show you that where we are and why I'm really using caution here. Bullish percent index are up at 89%. Another 8 or 9, 10% here. We're at 100. Can't get any higher than that. So, and look at the markets, literally straight up in an uptrend. So, just again, another word of caution. I would be using caution here. S&P 50 back up at 93 percentile, above the 50-day moving average, vertical. So again, we understand that these indicators are indicators and price is what pays us, but I just want to show you where we are. Stocks above the 200-day moving average. We are so far away from the 8-day moving average, and then that's what I'm saying is that if you're looking to add to your order, don't get caught up into this euphoria. Let it at least pull back to the 8-day, something reasonable that if you wanted to add to your position as your long trade position. Okay, that's the 200 bar weekly. Okay, now let's take a look at copper. And copper here continues to literally be weak, showing signs of weakness. And this is really another thing that bothers me. But again, it doesn't have to. But copper, if copper does start to break down and really start to sell off, I think you could get something some meaningful pullback here in equities. And here's the weekly chart of copper, really just back testing this area here. But again, does not look good. Copper does not look good. Something that I would like to see copper follow suit here with equities. But again, that's not happening at the moment. Take a look at the VIX. VIX actually has not really broken down now, especially that big week we had last week. We have the VIX really holding steady at around 12.5. So the VIX has not broken down at all. And if you look at the CBOE, closed bullish, 81%, but still well in this area. I would think that you would see a large spike lower down at the 60, 65% at really extreme levels. But again, has not done so. Still here, and I do see that the option market's pricing a little bit of fear in the market. But, you know, again, we got to take this one step at a time here. But these indicators, like I haven't really been showing to you that much, only because that they're at extreme levels. Our momentum oscillators are extreme levels, and yet the market continues to run higher. Okay, take a look at gold. We had a great call in gold. I got a few emails that some guys have taken some nice gold trades. Good for you. Hats off. Take a look at the gold weekly. Last night, gold actually traded down to 1340, which is right down here, and now has recovered some and trading at 1351. Still below the close from Friday, but like I mentioned, once you broke that 200-day weekly moving average, a lot of fund managers, they see that they're going to start breaking down. Now, gold hasn't really done much because of the fact is we had this huge euphoria from Monday, from Friday's big move push up. If gold were to hang around here early in the pre-market session, I think gold will have some influence in equities. But now gold has recovered. I don't think that's going to happen today. I also think that the equity markets will probably follow suit, maybe consolidate today. And then tomorrow we have that turnaround Tuesday. We've had every Tuesday since January 2nd up except 3. Every Tuesday. So I think Monday and Tuesday is going to be some sort of a pause or a grind, and then we'll have to reevaluate and see where this market goes for the rest of the week. It's going to be interesting to see. My guess, there is no guess really. We could literally grind higher, or we could start to sell off, and we're at this inflection point now, which I'm going to show you in the charts. We are at this upper end of this channel. Look at the monthly chart. We broke right through this all-time highs. We are on uncharted territory, and we really need to see where we're going to go from here. But we are at resistance here, and we do have some extensions on our Fibonacci retracements back at these areas. So, do you want to short here? No. This is not the time to look to short, but we want to see if this does pause and create some sort of reversal candle, a break below the reversal candle, then you could have a meaningful short with a stop above the high. But right now, I just want to show you the monthly chart here. We're at this area of resistance. Weekly chart looks fantastic. We are at these highs. As you can see, the oscillators up about 93. And again, guys, if you just take this and you just move this along, you can see where we are here in a weekly chart. And actually, in a weekly chart, we're literally breaking out. We're overextended above the Bollinger Bands. The 8 comes in at 157. We're almost 10 points away on the spiders. So if you're looking to buy, don't buy up here. Look for a pullback, at least some sort of a 2 or 3% pullback. I think you're going to get a deeper pullback now that we're at all-time highs, and we have literally chugged along ever since since beginning of January. We popped up here that one day, that 1 week, and look at this. Literally 2 days, give it 3 weeks out of since the beginning of January, we've literally had a 3-week pullback out of all of this time. So to me, that's a little bit much. Nobody has seen this at all. No one. And to me, I think that the Fed has to worry, or at least be concerned about what's going on with these equity markets. Look at the weekly chart, 93%, 1.8% in the MACD, overboard here in the spiders on the daily chart, and we're just chugging along here. I mean, we're just literally chugging along. Can we move up today? I think the theme remains the same. If you're looking to really be aggressive, you want to be sticking with the trend, you want to be looking to be buying pullbacks. Me personally, I'm looking for a stock that maybe hasn't moved, and believe it or not, and you have an extension of these rallies, a lot of the garbage stocks really haven't moved, and they are usually the ones last to move. So if you're looking at stocks that are $1 to $5 or $10 that really haven't moved, take a look at them, do a scan on that, and I think that's really what's going to be the theme if you're looking to get long. A lot of these stocks are way overextended, too rich for my blood, or if you're looking to do something, look for counter trend trading as far as selling relative weakness. I wouldn't want you to be shorting strong stocks, but if you get a downgrade, an upgrade, or something meaningful successful and the stock is down on the morning in the pre-market, usually it's not going to matter with what the markets are giving you for that day. So if the stocks are equities are up and the one stock you have is particularly down and down for a reason, if there's a catalyst, usually they'll stay down, and that'll be a good reason to sell that stock for the day. And that's what I'd be looking for. I'm not looking to engage in any long-term uptrends here with a lot of these stocks that are extended. Unless, again, you could find some of these cheap, crappy stocks that are probably going to be looking to move next this week. So just keep an eye on something like that. Here's a 30-minute chart. As you can see here, guys, we literally have been up in this. We had this little gap up. We've grinded higher for days, for at least all of May, and then we've had another pop up, we've grinded higher, and then another pop up at the end of the day. This is just incredible. Look at this, grinding higher. So you really get one big move and then a grind higher, and that's really what happens, and it's just creating havoc on the day traders. Here's the IWMs, one of our leaders, doing well, as you can see here. Nothing wrong with the chart at all other than it's extended. Transportation sector doing well. Again, nothing wrong with this chart. Again, we are just literally overboard here. Uncharted territory. Can we move higher? We sure can. So just keep an eye on it. Don't fight it, guys. It really isn't worth fighting the trend. Stick with the main theme is buying pullbacks for the moment. And again, if you're a little bit concerned about buying pullbacks, then just stay on the sidelines until things start to redevelop and start to readjust itself. Here's the diamonds. Again, a little slower than the other indices, but again, still doing well. Goldman Sachs, we had a nice call here in Goldman. We did break out of that bearish symmetry. We broke out. We did a bull flag here. I said, guys, if we break out of here, I think Goldman's going to go through the roof, and sure enough, it did. Nice big call in Goldman Sachs, and now we're back testing the 100 percentile from this low here. Now let's see where this thing goes. Do we break down and start to pull back again, maybe in another bull flag, and then break out higher? Only time will tell, but I'll be not looking to short Goldman yet. I'll be not looking to short the banks as of yet. And XLF doing well here. As you can see here, we're on another channel. Take this and just move this back up in here, and we are on another extended channel moving higher. So I would not be looking to short any banks. Again, guys, when you do your analysis, work on the ETFs, then take it and dial down to either the weakest or the strongest stock and look to buy it or short it. That's a great little tool to have, and at least your half of your homework is done because you have identified the trend, and now you're going to be looking for the strongest or weakest stock in that sector. And then here's Apple. Apple actually did very well on Friday. I was actually impressed. We hit the 418 literally to the penny, as you can see here. This is a weekly chart. Now, where do we go from here? If Apple can hold this weekly bar of I think it's 418. 418 was the low. Then I think we have a shot to the 480, and then of course the 500 right here, this little area of resistance. I think we got a beeline shot right to this area. Now, if Apple takes out the 418, you're going to go to the 400, and then you're going to probably test this area here, the 200 bar weekly moving average. And here's the daily chart I wanted to show you. Now, on the daily chart, and you see these ellipticals here, it really looks like an inverted head and shoulders, right? We have actually two. We have a head and shoulders pattern here, head, left shoulder, right shoulder, and we have the neckline coming in at 418, right? And the target on a breakdown is a 363-ish. However, when you see a head and shoulders on the bottom of a pattern, really doesn't work out too well, okay? Now, we have literally chopped around, we've rallied up higher, and now we've actually sold off to the 418. This looks like to me that if we can take out the 470 area here, 470, then I think you're going to have a real good shot at the 500-ish. So that's what we're going to be looking for this week for Apple, and see if Apple can actually really materialize and break out of this inverted head and shoulder. So we have two patterns really in the works here. One at the neckline at 418, one at 470. And in between there is going to be chops. So let's keep an eye on Apple and see where that takes us. And then, of course, lastly is the Qs. Qs on fire, technology on fire. Really, most of everything is on fire here. Even utilities, healthcare, and consumer staples are on fire. So everything is moving lower except gold and bonds. So we'll see what happens. Really an interesting market, guys. To me personally, I have been taking a step back, and I've just been trying to trade the best setups intraday. Yes, it's been a little bit slow, but if you can grind out some gains here and there, you're still getting paid and minimizing your risk until this market can really correct itself. Have a great day. Have a great week, and we'll speak to you tomorrow. Take care.